Welcome to Second Take, the show that focuses on the issues behind the news. This week, South Africa's electricity utility, Eskom, released its results for the 2010 financial year. Engineering News editor Terence Creamer attended the presentation and joins me now in studio. Terence, welcome to Second Take. The results showed a strong turnaround from a 9.7 billion rand loss in 2009 to a profit. Is this a sign of return to stability?
Well, to use probably a contemporary analogy, Eskom's gone through what BP's probably going through in the Gulf of Mexico at the moment, an oil spill. It's really been out of control. We saw financially last year that very, very big loss, which was related to operational losses as well as a loss on their financial derivatives related to some power contracts that are linked to commodity prices and to currencies that they can't control. So it's been a very difficult period for Eskom over the last few years, and to say that they definitely are stabilized, I think would be overstating it. They did make this 3.6 billion rand profit, which I think surprised on the upside, but I think there's still some way to go in terms of this recovery. But I think there are signs that they are stabilizing things, that things are on a sounder footing. And I think the fact that they brought out their results so early, these were preliminary results, they weren't final audited statements, but they're trying to show that they're getting benchmarking themselves with sort of corporate South Africa and not leaving results to linger for months and months as they have done previously.
Eskom still faces a funding gap of between 50 billion rand and 190 billion rand. Firstly, can you explain why the figures quoted vary so widely and also what Eskom is doing to close this gap?
Yeah, the figures vary so widely because it depends what is put into the 7-year capital expenditure program. So Eskom has a commitment, or has got committed capex of around 550 billion rand. But they're saying that we'd need another 140 billion of capex over the next 7 years to realistically keep the lights on, to add the baseload capacity that we need and to not enter back into an energy crisis. So the difference between the 50 billion, which is after 7 years what the funding shortfall is for Eskom, the 115 billion, which is what this shortfall is going to be in 3 years' time, so it's a bell-shaped curve. So there's a peak in that shortfall, and the 190 billion is the fact that 140 billion of that capex is no longer going to be done as it has in the past by Eskom alone. There's going to have to be other participants in that. So to close this funding gap, which is really a 50 billion funding gap over the next 7 years, there are a lot of strategies being thought about, and they're working with JP Morgan on this, as well as Credit Suisse. Now, Credit Suisse is specifically brought in on a transaction regarding Kusile Power Station, 141.5 billion power station that is rising in Mpumalanga as we speak, but they don't have the money to actually fund it. So they would like to bring in private equity partner into that. That's controversial. The unions are opposed to it, as well as, the private sector is saying, is there going to be appetite for this project? The construction risk is out of their hand, can't be mitigated. Aren't we going to have to offer terms that are really going to be onerous on South Africa in the long term? But nonetheless, a roadshow has been undertaken, and they've gone to Asia, the US and Europe, and they've spoken to investors, and they have laid out, the sort of conditions that they would come into a Kusile. And so that's the one one instrument they're going to use to try and close this funding shortfall. They're hoping for 40 billion rand there. The other instrument is obviously local and international bond raising and bond issuances. I think we'll see a global note program listed sometime later this year. I think they're still deciding whether they're going to list that in London or in the US, and they're having to make a choice there. But I think quite a good portion is going to be raised off the bond market. And then thirdly, there's this 176 billion government guarantee, 60 billion of which hasn't been converted or committed. And Eskom is looking with government to try and convert that into some sort of quasi-equity structure to boost its balance sheet, which is relatively weak. I think they sit with equity of 70 billion on a balance sheet while they're rolling out this 500 billion rand plus capital program. So they're trying to boost that and stabilize. The key point there is to try to stabilize its credit rating at a BBB plus, so that when they go into the market, they are able to access those capital markets. And then finally, and it's going to be very unpopular, they're going to continue pushing for higher tariff increases. They've got the 25 times 3, and I think they're sort of alluding to a 25 times 5 type tariff path, which I think is going to make them very unpopular once again.
What could this mean for future projects and for independent power producers?
Well, I think the Eskom also has drawn a line in the sand with this, saying that they can't do the 140 billion capex that they would have done if they were the supplier of last resort. So they're saying, look, we can't be seen as the supplier of last resort where we commit to security of supply and run ourselves into insolvency. So we're going to have a new approach to that 140 billion, whether that's nuclear, coal-free, or whatever that is. And there's going to need to be partnerships, as well as there's going to have to be a lot of room for independent power producers, people that come in on their own risk, with their own balance sheets, with their own skills, with their own technologies, and try and stabilize this power system.
Terence, we cannot have a conversation about Eskom without mentioning leadership, especially in the light of what happened in November. Do you believe this matter is close to being resolved?
Well, the indications are, again, that things have made some progress. We did need to get the court case out of the way. Jacob Moroka, who reportedly resigned at a board meeting in October 29 last year, then disputed that, took the matter to court, and actually as part of that process, not merely seeking compensation of 80 million rand plus, he was also saying they can't appoint a chief executive. The judge set that aside and said, no, Eskom, you have the right to appoint a CEO in the interim. And that's what they've been doing. The board selection process has been completed. The names of the candidate or candidates, it's not clear, has been submitted to Barbara Hogan, the Minister of Public Enterprises, and now it will go through the government approval processes. And the acting chairperson, Paul Mkwana, says we should have some clarity probably during the course of June.
Thank you very much. That is the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.